Good evening, guys. Ken at Tortoise Capital Nightly Strategy Podcast for June 5th, 2024. I put an extensive set of reference material and examples of partnering with AI at a graduate school level for decision-making and creativity that I'm briefing next week to our three-star general in charge of all Army schools to show him what it was he signed up for by adopting our creativity protocols for all of Army professional military education. So this is, you get a chance to see um, uh, risk managed decision making through a slightly different lens, and thought you'd get a kick out of it. It also has important things to say about creativity in the world, and I wanted to share those resources with you. So we're going to start with the sniper trade of the day. So this one is going to be on 3 minutes in the usual way with EWW. This was yesterday's close right here. And today there was a gap up to here, a slight rise, and then a low in the 3 minute bar here, and it finished right there. So that gives us the dimensions of the OR3. 2 bars later, what I got was, let me zoom in on this just a little bit. Sorry. So that blue box is the OR3. And what we got was, the low of that bar, the low of the second bar, the low of the third bar, the low of the fourth bar. And then we had a high, and then a breakout above there. And that was enough. That's a 1, 2, 3 entry. And it's still holding well above this, the gap to yesterday's close. So I go ahead and buy that position there. And I'm using the R5. I'm sorry, the R10 risk boxer because I'm on 3 minutes. So there's my risk box. If this gets above the high of the day, then I'm going to feel pretty good about that. And so meanwhile, what that means is this space here is the tactical space where I'm looking to just get my risk from here above my entry so that I can become disinterested and philosophical about. So if that's my entry, and if I can get my exit to here when price is in this tactical space, then I can lock in that little wedge at no lose plus dinner for 2. And my entire psychology always changes when that happens. So let's see what we got here. Moves in my favor. It's staying above the VWAP. The PSAR has now emerged from out of the when that PSAR emerges out of the initial risk box, I always feel like that move is not noise, that it is a directional move because it moved far enough up to be able to pull the PSAR out of that initial risk box. And so when the PSAR then goes above the VWAP, I feel pretty good. Was the size of the opening bar allowed for pivoting to a different entry? It's really just a 1, 2, 3 entry. When you have that kind of a wild swing, I just say, well, that's interesting. I'm always going to be interested in getting long here or short there. But in the meantime, as soon as those price bars start getting small, I don't have to wait for that. I can just see a 1, 2, 3 entry. It's north of the VWAP, and it's north of a rising PSAR and north of a rising dragon. That's everything good. and this is the third day of momentum in EWW. So you put all those things together on a symbol that you trade a lot in, and you can get an entry rule that just says a 1, 2, 3 entry. Now, I would have accepted an exit right here, but the whole market was doing okay, and I'm still in the money, and I'm respecting the VWAP. If you exit here, then you should be re-entering here and not later than there. In this case, I was lucky and was able to hold on with the PSAR. And now I'm able to add a second position here because I've got 1R in hand, and I have a clear emerging dragon, and I've got momentum. So I decide to put the second position on here. That one pays off. Now, by this time, if I've got 2 positions on, then my stop should be right about here at the skin of the dragon, because now the second position is in the money, and now I can ride the skin of the dragon, and that way I'm not giving back too much. Now, I like the fact that the RL30 is up, the RL10 is up, all of that is good, but when I'm feeling very good about that, I like to lock in winning position on both of those entries. It helps my psychology. Check or hold. Now it's starting to stall. I should be getting out. Yep. Right there. I would have accepted an exit here or here or here. Any one of those is fine. As long as I'm north of the PSAR and the second entry is in the money, I feel pretty good. So on a risk on an R basis, it's 1R. That's a 2R trade on the first one and a 1R trade on the second one. So we're at about +3 in that series. I want you to notice that I've added this is the 5-day anchored VWAP here, that thick red line, and the blue line is the 10-day anchored VWAP. So we're kind of trading in the space between those two VWAPs. You'll recall that EWW had a 10% sell-off, and it's now had 2 days of recovery. This is actually becoming the third day of recovery, and all it's doing is coming back to the 10-day fair value. So the directionality of that move is not unusual at all. So what would we call this re-entry pattern here? Yeah, I think of it as a COTA 2 because it's a re-entry after a successful trade that pulled back slightly and then has crossed the dragon, re-entered. I would call that a COTA 2. Special form of that is emerging dragon because it's just slightly above the peak of the RL10. If that had been entered in here, then it's a pure COTA 2, but I think of that as the COTA 2, and it just happened to be an emerging dragon. Re-entry being the key to sanity. Excuse me. And I'm using the same standard risk that I did down here. In this case, that comes down all the way to the Bollinger Band mean and just above the VWAP. So I would take an adverse move of that distance to be an indictment of this upward move. And that if it got down to here, I'd be happy to be out. But however, it moves up a little bit and it's looking all right. It's now testing that 10-day anchored VWAP. The RL10 rolls over. We're now in the second stage of this. So if this looks like leg 1 and that looks like leg 2, I'm now in leg 3, and now it's already moved a considerable distance. So it's not unusual to see it start to stall here. So I'm at the rollover of the RL10. I'm ready to jump, stop, and take the skin of the dragon. We were catching up to the PSAR anyway, so that adds about another 0.5, and we were +3 here, so we're still in pretty good shape. Now I get some lower highs, and now it cracks below. It had this much time to reverse and give me a COTA 2 reentry to the upside, but it did not. It looks like the 10 period anchored VWAP is resistance. The dragon gets sideways. The RL10 is sideways. And here's where it cracks below the rising Bollinger Band mean. So I take that as a negative bias. And my initial target is going to be down here to the intraday VWAP. That would be a leg 1 move. And if this does not hold, in other words, this will be a test of support. If support fails, I would not be surprised to see it come all the way back to the 5-day VWAP. Check or hold. And again, I'm using the same anchor, I'm using the same standard risk box that I used here and I use there. So all my position sizing and all that is still standard work. It does not collapse, although we gave it every effort. Here's where the R10 reversed, and now it comes back to the dragon and the PSAR. So I just take that as a scratch. And now I actually look at this as, where did the RL10 find support each time? If I discount this, I can actually think of this as a COTA 2, as higher lows. And we're still north of the intraday VWAP. And if I can see it get above this, that's a new high, that would be good. So I'm starting to stalk that. Now, if it fails again, like if I see this, the breakdown of this support level, then I still have a move to the anchored VWAP and then down to the 5-day anchored VWAP. Check or hold? It makes a lower high. This time, look how close it was to the 10-day VWAP. This time, the peak was that far away. So this is actually declining. So I'm ready to re-enter that short here. And again, the standard risk box, check or hold. And I've got the PSAR actually flipped right here. Are we seeing that? It does about the same thing that it did the last time, and that was it hinted at some downward decay as it approached the intraday VWAP. It took a little longer to get back to the declining PSAR, But again, it did not collapse, so I get a little fractional win there. Just call that a scratch. We're around the lunchtime. I now take a COTA 2. This had two chances to fail back here. It did not. Each time the intraday VWAP acted as a barrier, and now I have this. I had the first little bit of buying pressure here that got it much closer to the anchored or to the 10-day anchored VWAP. So I'm willing to try that one. Again, using the standard risk box. Check or hold. Yeah, I mean we're in the chop, so I'm still taking those. I'm not sticking around too long. I get in relatively early. I'm not looking for a lot of confirmation. I just playing the PSAR flips. I didn't take this one as a could have, I suppose, if I was being really aggressive, just take. But it's in the lunchtime chop, so I just said let me let it cool off a little bit and see what's going on. And then it did not fail here. Did not fail at all. In fact, it made a higher low. So now I'm ready for the afternoon trade right here. Even if you take this trade or you try this one short, you don't end up losing any money because you're not sticking around. Remember, if these are going to work, it should work right away. And now we're close to the end of the day. And I just get out of there with half an hour. So this comes in around 3.5 to 4R. And gave it opportunities to make big moves. It just did not. Check or hold. And I'm using about a 40-cent stop in there. So yeah, that actually is an R10. So that's a wider, or an R5. That's a wider stop than normal in EWW. And that made it a little bit easier to trade it. All right, here's the second sniper trade of the day. This time I'm looking at DIA. And I'm looking at a 10-minute chart. So this was yesterday's move. You know, the morning move, and here's the lunchtime chop. And then in the afternoon, after lunch, there was a nice move here, a pullback, and then a recovery to close right there. So there is some upward pressure on this thing that I could, as long as this line here is not violated, then I could see any continuation from this area as a COTA 2 using those two reference points. So I get an opening. Let's see, we get an opening gap to here from here. So a small gap up. It runs up a little bit, runs down and closes right here. So that establishes that blue box as the OR10. So by default, I'm ready to get long here. I'm ready to get long there anyway, because we're right near the peak of the RL10. So anything north of that's going to be fine. And it fell out the bottom of the OR10, so I'm going to be short right there. And then my target is going to be back to the Bollinger Band mean, the 3-day anchored VWAP, and the 270-day anchored VWAP. How about that? And the in this case, the R10, which is about 90 cents. This is about 90 cents. I'm sorry, I meant R5. The R10 is about 45 cents in DIA. So the R5 is 2 times that. So that yellow box on the 10-minute is what I'm using the R5. That's about just about $1, which is nice because even on a money management stop, it's very close to where I would stop and reverse anyway. This one sells off quickly. Again, these should work right away when they do. And then this thing runs all the way down to here, opens here, comes back and closes there, opens and comes back up. And now what I have is like a 1, 2, 3. And I want to lock in 1R. So I just take that as my exit. The R10 hasn't reversed yet, and the skin of the dragon is here, but I take this just so that I can preserve 1R. Check or hold. It continues to improve. And now I'm noticing this kind of price action. And all I can see again are these little rising lows. The R10 has reversed. It made it through the skin of the dragon, which is starting to reverse. It's right coming up to the PSAR. It's right at the edge of the Bollinger Band mean. So I just decide to take that one long right here. And I'm going to use the same R5 risk box. Check or hold. Now, the tactical space is going to be right here. If it can get north of that peak of the R10, RL10, then I have a reason to be optimistic and that we have a clear upside signal. In this tactical space between my entry, which is here, and with my exit here, in this tactical space, all I'm going to try to do is get my stop above my entry so that I can lock in that little wedge of goodness, which is about a 0.2 or a 0.3 win compared to my 1R loss. And that's the no lose plus dinner for 2. I don't believe in the trade at all. I just believe that the frame it's a coin flip to go in either direction, unsurprising. So that's my trade frame. And that's my next decision is how soon I can get that stop from my initial stop up to the no lose plus dinner for 2. Pretty quick. It just moves smartly. Notice that that was enough price action for the R10 to reverse. And now I can see that it's coming down to the skin of the dragon. So I just jump stop and hit it right there. And on that much risk, I get about 1R. So I've just been ruthless about capturing 1Rs. Check or hold. Now this one, price does this. comes back through the dragon. I can see the Bollinger Band mean rolling over, the daily VWAP anchoring, and I feel this. So I take the supported fall crossing to the downside. Price comes through the dragon, and I just take it short with my entry short there, my risk box here. That is the same risk box as this one and that one. Standard work. I'm looking to see price get back to the support level here and maybe the 3-day anchored VWAP. Those are my price targets. It reverses almost immediately. In fact, all price did was come down quickly to the Bollinger Band mean and the VWAP and then reversed smartly. So I exit here at a micro loss and I just stop and reverse. And there's my risk box to the upside. Now all it has to do is get through this peak. If it gets above this line, I'm going to be happy. So I have a very small tactical space. This is where I have confirmation of that move. Check or hold? It probably looks easier on the 3-minute, but I was committed to DIA on the 10-minute and the 3-minute on EWW. And this was fairly orderly move on the 10-minute. This is DIA after all. This is the Dow 30. It comes back, the R10 rolls over, RL10 rolls over. I take the skin of the dragon exit for about a 0.5. And it's right around 3 p.m. And that's about all there was on that one. For fun and excitement, here was the NVIDIA move today. So if you're looking for action, as soon as here's NVIDIA's close, and the open was right in there, and it bursts up. And as long as it's north of the intraday VWAP, all of these little buy on dip opportunities, and then that's all as much as you wanted right there for a 4.5 or 5% gain. May have mentioned NVIDIA before. All right, let's take a look at the traders. Did a really nice job today, boys. Here's Brian. Excuse me. And he's trading the, in this case, the Euro Aussie on the 5 minutes. He tries the short, takes a micro loss, stops and reverses, same standard risk box, and crushes it. Here's where everything rolls over, exits here. He doesn't take the short, he doesn't take the long, he doesn't take the COTA too long, but he still comes in with, when he was not aligned, it was minus 0.4. When he was aligned on a single position, 2.9 for a total deal of the day of 2.5. He also, the gold dollar pair didn't meet the criteria for trade. And the advice that we had yesterday was just to shake it off, reset, get in the zero state, and keep trading. You got a 0.75 or 0.7 rolling R expectancy. That's going to happen someday. So So he's really in good shape here. And 50 trades in the bank with a 0.7 R rolling expectancy. That's like 35 R over 50 trades. Here is Satya, and he's trading EWW on the threes. There's that big OR3 box. He also plays the 1, 2, 3 entry here. Standard risk, gets paid, re-enters, gets paid, re-enters, gets paid for 4.7 R. He out-traded me on that one, even by taking that exit that I didn't take, and still only playing just one position. He out-traded me on EWW for 4.7. Nothing wrong with that. Sundeep. He's trading, imagine that, EWW on the 3-minute. He brings in 9.5. This included, he had put in a position here. What that essentially was he had taken this position on an intraday basis and then sold off most of it, kept a piece, and then that one slammed higher. And when he noticed the beautiful peak and he was up 6R, he just said, fine, I'll bank 6R and then see what happens. And then after the smoke cleared, he's back in the zero state after that first piece, and he gets this one and this one in the usual way, and he brings in an additional 3.3, so total of 9.5 for the day, and he stays out of the chop. No trades there. It doesn't get better than that. George? He's trading EWW on the 10-minute. There's the big OR10 candle. He plays the breakout standard risk box, takes the skin of the dragon exit for 1.3, calls it a happy day. I agree. Kevin, imagine this, EWW on the 10-minute, the big candle entry, exits 1.9. Today, as he notes, was a set it and forget it. Then on the 3-minute, there was a micro loss here for minus 0.4. Noticing that when you are calm, it doesn't even matter if you don't get that move. This is EWZ, sorry. I'd like to get that move, but really well done, fellas. Making my job easier. So the market 150, these are all daily bars, made a new all-time high here at 534.67. Has well cleared the previous peak. So this is all emerging dragon and re-entries. And here's the Kata 2 re-entries after the turn. When that RL30 turns, that gives you an owl here, an emerging dragon there, and another essentially emerging dragon there. So fireworks in our favor. You can see it a little more clearly on the 30-minute. Now I kind of added a couple new markups on this one yesterday. I just wanted to show you how it translates from the daily. The next chart's going to be the 30-minute when we look at that. And what I want you to notice is that when the R10 reversed, I put a little support level there. So that green line should act as a support level. When the RL10 rolled over here for a moment, that made this red line here a resistance level, which means it's an emerging dragon if it goes north of that. But then the R10 reversed again, and that makes this a support level. So as soon as this support was established and this resistance was broken, that really unleashes the hounds until you get to here, which is the first place that the R10 rolled over. So I put a temporary hold on that right here. And notice that, yeah, where the peak of the RL10 is where the PSAR flips. And now price is rolling down, sells off hard and reverses. Here's where the R10 reversed. So I put a green support line right here. And then this is today. The green line was the high of the day. The red line was the bottom of the day. So that makes this the yellow zone for today. And then price closed at the absolute peak. So when price today came up through this red line, that was a signal for an emerging dragon. So it's, if you can map those out on daily bars as well-defined price locations for support and resistance, then when we drill down to the 30-minute chart, so this is over the last 10 days, because here's the 10-day look back. So here's today minus 1, 2, 3, 4. So that's the last 5 days, including today, and then the next 5 days, right? So that support and resistance level were those are brought down from the daily report. So when you get this kind of, after this sell-off and you get that gap up and it recovers and you get this COTA 2 right here, because that's above this support level, that's actually a really positive sign for the day. And when it breaks through that previous resistance from the daily chart, that is a really positive sign. And then it closed right up in here, again at that all-time high. So I'm using these as markers from the daily report in order to just remind me where those support and resistance levels are. And you can kind of see already from, if you take a look at where the peaks and valleys of the R10 are, that really sets up a strong resistance level. And that's what that, on the daily chart, that's where the R10 peaks out at, very close to the peak here, by the way. So this is really a positive sign in my view. And as soon as it breaks above the previous all-time high, I'm ready to go. So I'm going to be very interested in who the big percent winners were today. Hint, NVIDIA, that is pulling this market north. Check or hold. Bullish normal. All-time highs in all of those lookbacks. Risk on neutral volatility. That's as strong as it can be. It's just, you can't get a stronger sign than that. The Dow tactical. Where was the strength? Apple and Boeing. Big strength in NVIDIA. Imagine that. And then big strength out of Walmart. That's the second day in a row Walmart has been breaking out to new highs. So you actually have a pretty broad base of gains. I mean, even Intel is getting on board the semiconductor bandwagon with a plus 2.5% day. Still have quite a few symbols that are auto framing nicely. So this is a buyer's market. ETF tactical. That's the Qs and the S&P and EFA. So that's the large caps from both the US and the globals. This is a broad-based vote of strength. Auto framer shows plenty of favorable upside trades with some names that we just love, like Caterpillar at 7-1, Energy in Brazil 5-1, ExxonMobil, DIA for crying out loud at 3.2, Tesla 2.5. So a lot of things to choose from. Industrials and finance at 2-1. Now, if I want to check to see which ones have been squeezed the most, what I like to see are ones that are that have a favorable ratio to back to the 10-day high and are also squeezed. So those top four right there, Exxon, oil and gas exploration, Tesla, Caterpillar, McDonald. That's hard to argue with right there. And the whole energy sector. So that's how I read that. Being dominated by the winter, had a few things sneaking into the summer. Coca-Cola to me is a little stealth trade right there. And we're looking good for tomorrow. So let's be prepared and look for some continuations in technology, especially those semiconductors. Let's get ready to get them tomorrow. Tactical Thursday.